Hey, Steve Gardner here. Wanting to do a little video and talk about why it's important to get pre-qualified prior to looking at houses if you're a buyer. There's a lot of questions I get over the 17 years in regards to mortgages, what different types there are, FHA, conventional, VA, first-time home buyer programs, how much money do I need to put down, stuff like that. When you're going to purchase a home, the first thing, especially in this market, in the fast market, always get pre-qualified. I recommend going with a mortgage broker. And I've got some great ones here in Florida. If you're from out of state and you're looking in Florida, let's say from New York, I recommend going with somebody in Florida or at least a local lender that knows the area. That's tip number one. Try to stay local if you can. If you like a bank, I've got a few banks that I recommend, but I prefer the mortgage broker. Also, one of the main reasons that you want to get pre-qualified, or even better, the difference between pre-qualified and pre-approval is when you're going out shopping for a house and you finally find one, you're with a realtor, and then you have to scramble for a day or two to get pre-qualified. Sometimes there's multiple offers and you will lose that opportunity because all sellers are going to require that a buyer obviously can purchase. So you got to get pre-qualified. I get a question all the time about what is the difference between pre-qual and a pre-approval. If you can get a pre-approval, that's even better. A pre-qual is basically you call up your loan your favorite broker, mortgage broker, and what they do is they basically get some basic information from you. They get your social security number, they run your credit score, you tell them what you make verbally, and based on those numbers, they can look at it and say, okay, you're pre-qualified for a loan. This particular type, conventional, 20% down, 10%, 5%, or an FHA, 3.5% government-backed loan, all those different types of things. And they give you a piece of paper that says you're pre-qual. A pre-approval letter is way better. That means you've actually handed them your pay stubs, your work history, tax returns. You've got the documentations. And what the difference between that is, and that's really solid, when you're in a multiple offer situation with another contract or two on a house you fall in love with as a buyer, if you've got something that says, hey, I'm pre-approved, basically that means it has gone through the first stage, possibly second stage of underwriting, meaning you're basically done. You've been approved for the loan other than finding the house you love. So to a seller or to another agent, if there's a multiple offer situation and you're going up against cash, a pre-approval letter is better than a pre-qual letter. But regardless, if you're a buyer and you're just starting to look, your best thing to do is at least get a pre-qual letter to get the ball rolling before you start looking at homes. Also, a good lender, sometimes you may think you may not be able to afford a house in a certain price class or a price point, but because the interest rates are so low, you may say, wow, I qualify for more, and actually my mortgage payment is not going to be that much more, or maybe it's less than I thought. So a good lender will give you that information so to know what you feel comfortable, what your monthly payments are going to be, what your expenses are going to be. So those are some really, really important tips. Briefly, and then I'll cut this, and I can always give you more information. If you find this useful, just reach out to me at any time. You can call me or email me or text me. The difference between loans, a conventional loan is basically you have to have a very good credit score, okay? Most conventional loans, everybody thinks is 20% down, but there are now 15, 10, and 5% down. That is the amount of money you have to put down. So if it's a $200,000 sale price on a house and it's 20% down, you have to come up with $40,000 other than closing costs. Closing costs, in additional, are like they collect taxes in escrow, your insurance that has to be paid in escrow, all the mortgage points, if you're going to buy down the mortgage rate, closing fees, doc stamps, all those kind of things, they all add up to additional closing costs. So keep in mind that the down payment is different from a closing cost. Okay. FHA is the most common I see. I'd say 85% of the deals now are FHA. It's like a first-time home buyer, but it doesn't even have to be a first-time home buyer. It's 3.5% down. If your credit isn't that great, you're hovering in the low sixes, 580, 620, 640, that range, you can get a loan with 3.5% down. And then sometimes if you need the additional money for closing costs, we can ask the seller to roll those in. and help you out in regards to that. But anyway, that is a quick overview of the different things in mortgages. I've been doing this for 18 years. I just probably got myself in a little bit of trouble. I'm not a mortgage broker, so I'm going to put the disclaimer right in there. But I do have a great list of people that have been in business a long time that can get it started. Once again, feel free to reach out to me if you got any questions about the mortgage process. If I don't have the answer for you, I'll get someone to give you that answer that knows all about it. So anyway, I will send some other videos here your way shortly as well. Thanks. Take care. Hope you enjoyed this.